All right. Now, welcome back. We starting off on a Monday, 10 a.m. red folder. So I'm looking for an entry within the first 30 minutes, but we're going to start off with the weekly analysis that I had on Saturday, because I had to work on Sunday. So this is the daily and the weekly. So the weekly, we had a new week opening gap here. Unfilled, so I'm expecting us to trade higher the beginning of the week. And that's all I'm looking for the beginning of the week until it shows me what it wants to do afterwards. We have this old high, buy side liquidity, lower time frame. There's a lot of relative equal highs, high probability liquidity after this displacement. Potential change in the state. Well, it is a change in the state. We don't even reach the opening price. We utilize the wick upper quadrant because we fail to reach the consequent encroachment level, which is a bullish signature. So that's already telling me that we're likely to continue higher. We have that new week opening gap that's unfilled. We have this unfilled volume imbalance, new day opening gap, along with the rest of this suspension block. So that's what I want to see in the beginning of the week. And this is the weekly. We didn't trade to discount. So I want to see, like, on the daily chart, if we'll fill this in and then maybe break down and get into discount. Here's the 4 hour. A little 2022 model on the 4 hour. And then the hourly. You have that buy side liquidity, new week opening gap fill, and all that good stuff with some sell side right here. So that's like about it. I'm gonna go to the chart. It's about it. I have set off though, but we traded down on Monday, today, to that order block. Traded to that order block's opening price, to the tick actually, and then shot up exactly to where I just showed you, where I wanted to see it go before the week even started, before the market even opened on Sunday, and it did exactly that. So we never even used this gap, left it open because there's low-key like a consolidation. So this is a breakaway gap. Hourly, left it open. Huge new week opening gap that is not on my chart because this is the wrong chart. So I'll just go to the AM session right now. AM session, you have that huge new week opening gap that you would expect and want to see get filled. But if it doesn't, then that's just telling me that we're bullish and that we're going to continue higher. And that's exactly what it did. So every day, simply looking for something like this. This is, I'd see this as the I'd see this run higher to sweep out this minor buy side here before market open as the fake move in the real direction. And then after that, I'm seeing this run lower right here as the Judas swing. Fake move, manipulation, whatever you want to call it. It's not the real move. It's not where price is likely to go. So before market opens, we sweep liquidity, we sweep minor buy side liquidity, and then break down. And we're already breaking down before market opens. So when it opens, we take out the liquidity because, again, I wanted to see the new week opening gap get filled, but it doesn't have to. But that's what I'd be looking for when market opened. So market open, we trade down, but we leave it open. We don't fill in the gap. So that's telling me that price does not want to continue going lower. That's telling me that we are now probably going to start moving higher. It's just a bullish signature. And that's literally it. So after this 932 candle, the last down close, we close above it. That's our change in the state. The 934 candle trades down. We don't even reach the opening price. That's a bullish signature. That's a bullish signature, and then we just trade up. We wick through this gap. That's another bullish signature in my book. When I see that happen, I'm kind of anticipating I'm anticipating the gap becoming an inversion. So, especially after we took sell side liquidity that formed after 8 a.m. or after 7 a.m. Here, we swept the liquidity. This would make this a high probability inversion fair value gap. But since we just had sell side delivery straight down and then buy side delivery straight up, this whole range right here is considered balanced. And that's why we didn't come back down to this first fair value gap, which I would expect for this to be the entry because it is Monday. And that's usually what happens on Monday. You get a first fair value gap entry within the first 30 minutes. The opening range is what you consider the first 30 minutes of New York, 9:30 to 10 a.m. So we're likely to leave this open. We don't even use the inversion fair value gap. We shift structure here. Although I said this last down close is the change in the state, the whole thing is the change in the state. So like call it what you want, order block change in the state, but we displace, we shift structure. Alexa, off. That's nice. We run buy side once more. You think we're probably going to go lower now, maybe fill in that gap. No, it already did the damage and it already told me what it wanted to do by not filling in the new week opening gap. So after seeing this, I'm just seeing my model right here. The 2022 model, we shift structure. You have a change in the state. There's an inversion and there's first fair value gap. This is balanced down here. So this fair value gap will be used and is more than likely to get used because from this low to this high, discount aligns basically with the new week opening gap consequent encroachment. So we have to trade all the way back down to get below the new week opening gap. Well, wick below it. You just want to see it trade to discount. We traded to discount and we have a high probability fair value gap, BISI, because the new week opening gap consequent encroachment lies inside of that fair value gap. So this is a very high probability gap with a change in the state in it as well. So that's just your high probability 2022 model that happened within the first 30 minutes on a Monday, which is likely to occur more times than not. After that being said, you have this fair value gap, and this is all before the macro, and I'm comfortable taking this before the macro because it is a Monday, and I'm used to it. I've seen it. I have the experience to know that it's likely to do that more times than it is not. But next, we have the macro, and then you have this fair value gap here. You have this fair value gap that forms. As soon as we get outside of here, outside of this gap, we have this fair value gap that forms. So now you have the price. We're already bullish. We're already in a buy program. We're already looking for buy side above here, 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 here. Like all relative equal highs here, relative equal highs here. Looking for the new week opening gap high here. And my final target for the day would likely be here. And that is the fair value gap SIBI high that I will explain a little later. So you have the price, which is this fair value gap, and now you wait for time if you haven't gotten an entry or entered yet. You have price, you have this order block. We trade down to the inversion here. We leave the gap open, even though there's a volume imbalance, we don't come to fill it in. We leave it open, or unfilled, I should say. Close back above these down close candles, that's an order block. And then trade up, trade back down into the order block. We dig into I'm at mean threshold, which is the midpoint. And I'm not going to use the wicks. I'm going to use the bodies on this one. So this is mean threshold. We close below it slightly, and then an immediate rejection or an immediate response back to the upside to validate this as an order block as well. And then this candle at 950. So we have the price yet again, and at 950, it provides us with another entry to pyramid or to get in for smart money at the right time. If you didn't have this entry down here, or you didn't get in down here, it provides you with the entry or a pyramid entry when the time comes, because it's the right time and it's going to give smart money a way to get into the market. And that's exactly what it does. 950 forms the order block, 951 validates the order block, and then we have another order block that forms inside of this order block. And then I'm seeing that as a propulsion block. And that should make price spool higher. And we're also inside the macro. And that's exactly what we do. We spool to this old first fair value gap, and we take out a lot of liquidity. We come back down. We trade back down, retracing to this fair value gap. Tapped it. Retraced. Came back down, took out the sell side. And here I would see this as our silver bullet due to the fact that it provided us with an entry after 10 o'clock. Even though this fair value gap forms inside the macro. Forms inside the macro. It's a high probability fair value gap as well. It's inside the macro. But I'm seeing it as the silver bullet because our entries for it is still inside the macro, but it's after 10 o'clock. So I would see this as our silver bullet entry. And then after that, we just utilize this order block, utilize the quadrant level from the daily chart wick, and then the new week opening gap high. Utilizing that, look how we respect it. Look at the bodies. They tell you, like, just opens, closes above, and then we never close back below it. We're respecting the volume imbalance, we're respecting the order block mean threshold, and respecting quadrant level and the new week opening gap high. So you have like 4, even 5, 6, like high, lower, low. You have a breaker, you have an order block, you have a volume imbalance, a quadrant level, and a new week opening gap. You have more than 3 things telling you that price is likely to do a certain thing, and that is go higher. And then this is essentially like kind of a consolidation. So we have another breakaway here, breakaway gap, and then we just spool higher to the buy side for the rest of the day. And then we fill in the new week opening gap high that I outlined, the buy side that I outlined, and then I'm not worried about none of that. And then we trade to that fair value gap SIBI high, and then I'll go to the daily right quick to show you. And that is this right here. And I'm using this as the fair value gap. I'm saying fair value gap SIBI high because it's an old low, so like it's a key level, but I'm using it as like the normal fair value gap, like here and here, instead of here and here for the suspension block. So for the day, I'm not expecting this one candle to trade all the way up here. I'm not expecting that, but I am expecting it to trade here, and that's exactly what it did. And then off of there, we retraced and closed for the day. And shit, if you were a part of that, then kudos to you. Like, that's just a flawless day, flawless model. And yeah, it excites me, and that's literally it. But I'll probably drop like some more videos this week. I may get an account this week so we can get back to business. But yeah.